Hello everybody. Today I'm going to be showing you guys a ORB strategy. And this model was brought to my attention by someone called SKG, so sketchy kind of guy. I will leave our Discord and his Discord in the description down below so you guys can have more information on this model and ask any questions that you need. Let's get in this video. Okay, let's get into the rules and regulations of this trade. Not going to be that difficult. It's actually pretty simple. We're going to break it down by going into replay, going down to the 1 minute and looking at what we're doing. So we're going to be waiting for a range to be created between 9 o'clock and 9:22, 9:23. This will be our Q1 accumulation, but before we go to 9:30 of market open, so we can use this as a directional bias for our trades, our support and resistance for our trades, our reactions, reversals. Everything will stem from this small little range that we created just before 9:30 market open. So how are we going to use this range to our benefit? We're going to be having a little bit of a higher time frame to this 1 minute. So we're going to wait for a 15-minute time frame. We're going to be looking for wicks, big wicks created on the 15-minute time frame. Usually these wicks are going to be around 25% the size of the body, if not bigger. It just needs to be a bigger wick. You can also have these dojis that can count as entirely one wick. This is just going to be used as our support and resistance or reversal areas depending on where our range are sitting. We want to have these wicks outside of our range accumulation by the time that it ends. We're going to be waiting for another one. Let's see if there's one above. We do have large wicks. Just above. So we have below and above the range, we have 15-minute wicks. We're going to be using this as our draw on liquidity and our reversal points. So we're going to be waiting for the market to open. We could see we draw these lines as the range closes. These lines are standard deviation lines. We're going to be using this as our take profit and also our stop loss points depending on where we enter. We're going to be using this as little zones and see how the market reacts from these zones, because that will indicate where the price is going to go. This is just standard deviation on that small little range that we created between 9 o'clock and 9:22. So don't think that it's from a different range. This is all still stemming from that range that we created. Okay. One thing that I'm going to be looking at after we draw our 15-minute is I'm going to be changing this chart back to the 1 minute, but I'm going to have a secondary chart, so a correlation. I know some people don't trade SMT with this model, but I do, I know, I blame myself. But it does help me because I have found, let's go to US30 for this one, that we can have our SMT specifically at points of the standard deviation levels and also our points of our top and bottom of our range. Now I didn't draw the internal high and low, so we created this wick at the top, we created this wick at the bottom. Let's also draw that out on our correlation chart. Okay, so let's get into this trade. What we need to get into a trade is price to disrespect a support or resistance, meaning this wick, close below, close above. So price needs to break and close, but also in that same move, it needs to, after breaking, that candle needs to come back. It needs to tap into the support. Not saying that exact candle, I'm talking about the next candle after that, or the next move. You could have price taking up like 3 candles before it comes to the zone, or it couldn't even react into the zone and just continue. But typically we wait for the rejection, it breaks into the zone, and then we wait for a displacement candle away from it. That will then be typically the entry, stops below, and then take profit out of standard deviation levels. The rules for stop loss and take profit. So depending on where we are in this range, from what I've realized is if we're getting our breaks, typically larger candles, okay? And we're filling at least half this range. I'm going to be using around 18 ticks. This was told by a sketchy kind of guy. So we're going to be using 18 ticks for that. But then also there are scenarios where we have a rejection from a wick, but it's clear that is the law. You have a chance to have a very tiny stop of around 3 pips. But that is seldom. It's seldom. But yeah, let's get into the straight. Let's see what happens. Let's see what's boogieing, and let's get into it. So we're going to be waiting for a disrespect of a low or a high of this little tiny range. We can see we took that low, but there's no SMT, so we're not going to be looking for buys at the moment. We created a wick. That is going to be our new support. See if price is going to reject off of that. We created another nice wick. So we're going to need price to typically break past that wick, reject, and have a continuation for us to get into a trade. And then on top of that, we're going to need some sort of SMT to also continue that. Now for SMT, 2 things that I look for is if we do not have it on the range that we're in right now, the next thing I look for is the current range, like the current quarter that we're in. So we're in quarter 3 right now. This is New York. We see that YM engulfed and took the low of that Q3. So that's SMT for me. We're going bullish at the moment. So seeing that we have the SMT at the bottom with Q3 range on YM, what I'm going to be waiting for is the exact same thing that we wanted price to do after closing below these wicks, is a rejection into that wicks as our entry with a displacement away. We're going to be waiting for that. But because there's SMT, it's not going to happen. So we're going to be waiting for price to do the exact same thing, but on the other side. We created these nice little wicks, okay? We need price to reject from our support that we created at the bottom of this range, show clear rejection, indicated that it wants to come in, take some orders, and displace higher. We need this. This will then be our entry for our trade. We have price pulling into our 15-minute wick that we drew out. We closed below that wick, but now what we're going to need is price to reject from it. If we get a rejection, we enter. If there's no rejection, we don't. If there is a close above these wicks with a rejection back into, we continue this trade. We have higher time from SMT to go higher. We just need price to play with us. We see we have an engulfing candle. Now what we're going to be needing is price to show that we are tapping into orders and rejecting higher. We have a close above our wicks. We have price with this wick pulling into our orders. This will then be our buy. We're getting in for a buy. We have our stops at 18 ticks. So let's get this trade done. 18 ticks would be the low of that candle. So rules on take profit is this. Standard deviation 1, break even. Standard deviation 2, partials. Standard deviation 4, full TP. Now, this is all subjective. It all depends on where your stops are. It all depends on how big your risk to reward is. It all depends on how sane you are as a person to know how long you want to hold your trade. So it's all subjective. I tend to run to the first standard deviation because that is usually giving me a 3R. If we're getting our trade from the low of the range to first standard deviation, I tend to take first standard deviation because that's already a good risk to reward. But you can get a higher risk to reward if you go to the next. So if we're going to play to standard deviation 2, let's have stops on break even and then take profit at standard deviation 2. Actually forgot to put the stops down. Stops down. This doesn't take me out. Okay. Let's see if we're getting to first standard deviation. We made it to first standard deviation. I'm going to be moving my stops to just above the range. Here we have a rejection from our standard deviation. Because the same thing's going to happen here. We have disrespect of this level. We have a price pulling into collect orders. We're creating a wick. And then within 3 candles, we displace higher. So we took our take profit. Now, I want you guys to keep this video open, because in this day specifically, we had news at 10. So that means we have new volume being induced into the market. Usually by the end of this trade, by the first trade, if it happens around 9:30 to 9:45, this trade, in my opinion, tends to be over volume-wise for these big moves. So if you don't have news at 10 or after this, I wouldn't necessarily open up another trade for a big RR, but that's all subjective, but that's just my opinion on it. So we're going to be waiting for news to come out, bring in new volume, new people into the market. We're going to be waiting for a new SMT. And then the 2 SMTs that we're going to be looking for is previous day high or low and current session high or low. Okay. So let's wait for 10 o'clock. Cool. So we have our 10 o'clock candle. We're taking the current session low. So at the moment, we're still bullish. We're still bullish on our bias. We can see price rejecting on that internal low, on that wick. Also got a nice wick here as rejection. We have a wick created from that SMT for the 1 minute. So what I'm going to be waiting for is price to pull back into this range, give us a nice rejection, and then we can get in for a trade. Okay, so we have standard deviation rejection. We created a very nice wick, and that next candle displaced away. So usually if we have a displacement away from our wicks within 3 candles, we can see that as continuation. So if we wanted to sell, we could have ended on the sell. But yet again, the bias is bullish. So we're going to be looking for buys. I'm going to be waiting for a new SMT to validate that we want to go bullish. We do have the one of the current session low, but this wick is big. And also if we're using our FIB to see where we are in the market right now, yeah, we're above 50%. So I'm going to need price to at least pull into 61.8, 70.5, and then have a rejection from the zone, because we're not in premium at the moment. So if we were getting into a trade, especially after this rejection, it would have been 50%. Like, this would not have been a good RR. So let's get into a trade that has a better risk reward. Okay. Here we have YM taking that low again. We have ES failing to take that low, but in that same breath, it is taking out these equal lows. We're going to be waiting for a candle rejection away from that zone. We have the candle rejection and close above that wick that we just had. We can have 18 ticks to that trade. $18.6. And then we run back to standard deviation 2. We have this candle pulling in, rejecting from our our zone that we had. We have price pulling back into the zone that we created on 9 to 922. See if we get some rejection. We still haven't gone break even as price has not touched one standard deviation, so we're still waiting on this trade. Here we have break even, moving stops just above the zone. Price is rejecting from that standard deviation. And there we go. If you guys have any questions about this model, please go to the comment section down below and just type it out. If you guys want to ask us directly and get probably a quicker response, please join our Discords. I will leave mine and Sketchy Kinda Guy's Discord in the description so you can ask us questions about this model. Thank you so much for watching, and I'll see you guys pretty soon.